And hello, everyone. Welcome to another power scanning session. Once again, for the lookout for the most interesting swing trading setups for the week ahead. It is July 5th, 2025, one day after Independence Day. And one more time, also from my side, well, happy Independence Day for all our US viewers today. I hope you're feeling good. I hope you had a great day yesterday. You enjoyed the fireworks, the barbecue, or whatever you were up to. I am greeting you today from our beautiful office here in Montreal, in Canada. We, in fact, had our National Day here on July 1st. It was Canada Day earlier this week. So these two celebrations very close to each other. Before we get into it, where are you guys calling in from? So I already said I'm calling in from Montreal, but who else do we have in the room today? Let me see. So please put your location into the Q&A box. There we go. All right. We have Lexi from New York City. It's a very sunny and quiet day. No jackhammering. Yeah, I guess everybody's enjoying the long weekend. Awesome. Thomas from the Black Forest. Hey, Thomas, wie geht's? Aubrey from hot Cyprus. Yes, Cyprus is indeed very hot. I've been there 2 weeks ago. I can confirm it firsthand. Keith from the Scottish borders in Scotland, not on the English side. Hey, Keith, how's it going? And there's an ambulance driving by our office right here. And it's a bit noisy, but hopefully this is not going to last for a long time. I actually have the window open today because our air conditioning is not functional today. Ralph from Winnipeg. Hey, Ralph, how's it going? Ralph and I, we communicated a bit earlier today and yesterday. He had some setups to go through, so thanks, Ralph, for that. Stephanie from Gatineau. Hey, Stephanie. Comment ça va? How are you? Frank from Den Haag. Hey, Frank, how's it going? I heard it's very windy today in Holland. Is that true? Somebody told me this. Steffen from Hamburg and Andrea from Hamburg. Moin, moin, as we say over there. How's it going? All right. And okay, that sounds great. Thanks, guys, so much for sharing your location. Let's get started. And once again, a quick reminder, today is all about swing trading. So duration typically between 2 and 20 weeks, something like this. And what's beautiful about these swing trades is that these respond very well to technical factors, that kind of technical analysis that we are focusing on, which is based on support and resistance levels, trend duration, volume, and so forth. And the beauty about what we're going to show you today is that everybody can do it. It's quite mechanical, especially with the scanner that we will be using. And in fact, it's very fast as well. So we call this the 13 minutes Sunday strategy. Something that we coined because it will not take you more than 30 minutes to find interesting trade setups every single day. Now, if you are joining us for the very first time, a couple of reminders. First off, this session is being recorded, and we will post this session on our YouTube page shortly afterwards. It typically takes us about an hour, maybe 2 hours to post this session. Also, if you don't know us yet or don't know me yet, I'm Daniel Cynic here on the left-hand side, and I am with tradingindicators.com, an online store specialized, as the name may suggest, on the creation of trading indicators. In fact, we've built thousands of those for clients all over the world. This is really our bread and butter. But over the years, we've also spread out a bit. We have created fully automated strategies and also trading scanners. And one such trading scanner we will be using today. Most of what we do is based on what's called technical analysis. I already mentioned it. Swing trades and swing trade setups, they respond very well to technical analysis. And in fact, you will be able, using technical analysis, to identify promising setups very quickly and in a very simple manner. And one of our, doctrines or mantras is that we believe that trading should be simple. And in fact, trading is simple, but you need to know what to look for. And you need to use the right tools. And what we are looking for and which tools we are using here at Trading Indicators, that we'll be sharing with you in this webinar. All right. And also, please make this webinar your own. If you have any questions, please don't hold back. Put your questions into the Q&A box, and we're going to get to those questions as this webinar proceeds. Niklas is in the room today, and he will be on the lookout for your questions. All right. Now, I also need to remind you that trading does contain substantial risk and therefore is not suited for every investor. If you trade, make sure to only use risk capital, which is money that you actually can afford to lose. When it comes to backtest performance or hypothetical performance, keep in mind that this is not necessarily indicative of future performance, and any trade ideas and setups and strategies discussed in this webinar should not be construed as trade advice. These are for educational purposes only. Before we start with our market overview, a couple of housekeeping items. First off, and Niklas, please put this link into the chat box. First off, we have a fully 2 hours bootcamp pre-recorded for you, which details every single feature of our dashboard, of the Liquidity View dashboard. Why did we do this? Because in these webinars and our scanning webinars, we really only touch the surface of what is possible with the dashboard. So if you want to know what is possible and how every single feature works, check out this bootcamp here at tradingindicators.com/bootcamp. We also have a a Discord channel, which you can join completely for free at tradingindicators.com/Discord. And in this Discord channel, you can ask questions, you can learn tips and tricks, and you will also receive trade alerts and trade setup ideas throughout the week. And of course, what we're going to be doing today is we're going to interactively scan for interesting setups. And ideally, if you don't have access yet to our dashboard, it would be great if you get access right away so that you can follow along as well. The good news is that you can get access completely free for today. Simply go to tradingindicators.com/view and sign up for a full week of a free trial of our Liquidity View dashboard. This is super fast. You will get instant access and then you can follow along. All right, and two last things, and then we're going to get started. If you have not downloaded our ebook yet called The Power of Three, where we explain the 3 main setups that we'll be going through today, you can download it right now at tradingindicators.com/power-of-3. This link will also be in the chat. And by the way, the chat for the 1-week trial, or the link for the 1-week trial, is tradingindicators.com/view. I forgot to mention that. And last but not least, if you have any ideas on how to further improve our dashboard with new features, with new symbols, or anything that you may want to see to help you with your trading, don't be shy. Please send us your feedback. Your feedback is what drives the future development of this dashboard. All right, with this, let's get right into it. Let's start with our market review. So I'm going to switch over to the dashboard. There we go. And we're going to start with the SPY. Well, what can I say when it comes to the SPY? We officially have completed the deep correction that we had seen in April. You can see it here, beautiful V-shaped correction. We recovered just as fast as prices dropped down. And then now we're all the way back up. And not just this, we are actually at all-time high prices now in the SPY. So we broke free from this key resistance level, and prices then have been drifting higher ever since. Now the question is, what may happen next week? And for this, we need to understand, first of all, and of course you will know this, that this week in the stock market was a very short one. Why? Because markets closed early on Thursday and they were completely closed on Friday because of the Independence Day celebrations. Now, this held true for the stock market, but what was not closed were the futures markets. They actually remained open. And let's check out how the SPY performed on Friday on the futures market. So I'm going to switch over to a different symbol. I'm going to type an @ES for the continuous contract of the S&P 500 E-mini futures. And we're going to open this up here. And as you can see, it's pretty much the same picture. We see the V-shaped correction here. We can see that we made all-time highs also in the futures market. But then we see what has happened on Friday. Friday actually was quite a bit of a down day. Nothing dramatic, but it was a down day. And if we look at this, it is not impossible, I would say, that we will see next week a bit of a correction in the S&P 500 down to this broken resistance level. And as you know, once resistance is broken, we can see it here, prices went above this resistance level. We cleared this level completely. Once this resistance is broken, it will swap roles. resistance will become support. And I can imagine that we may come down all the way down to this level, which will then act as support, and then the bullish move will continue. At least there are signs for this right now that we will see a bit of, a bit of a retracement now in the S&P 500. So please look out for this. At least be a bit careful with your bullish positions. Now, how does it look in the QQQs? Pretty much the same picture. QQQs, of course, are the NASDAQ 100, NASDAQ 100 ETF. Also here, we made all-time highs. We broke above resistance. You can see it here, and we stayed clear of this resistance level. But very much the same picture also in the futures market, which remained open on Friday. If you go to NQ, which is the futures contract for the NASDAQ 100, we can see also here we did have a bit of a down day on Friday. Nothing dramatic, of course. It's not the end of the world. These down days, of course, they happen in every trend. Trends don't go up in a straight line. Retracements are completely normal. But just, as a heads up, we will have potentially a bit of a gap down on Monday when the market opened. Nothing to panic. This is just a regular sized bar here. It's not even a big bar. But this may be, of course, maybe the start of a bit of a retracement in the futures market, in the NASDAQ 100 futures, down to its broken resistance level, which will now act also as support. All right, so that was that. What about gold? GLD, and if you remember, gold was the trade of the week for us last Monday in our newsletter. Of course, our newsletter is being published every Monday. And why did we call it out, and how did it fare since then? Well, what we saw in last Saturday's scanning session, we saw this. We saw prices came down exactly to this bar here. This was last Saturday's price action. And we said, okay, this could be an interesting idea to enter long gold. Why? Because we're hitting this dynamic support line. You can see this first green line here. This line is being projected onto the chart by our MA Rush indicator, and it's been acting as dynamic support for quite a few times. You can see it here. Prices came down to this level, bounced off from it. Prices came down to this level, bounced off from it, down to this level, bounced up from it, and now once again we came down to this level and we bounced off from it. And the idea was to enter long here with a stop loss just below, either a very tight stop loss just below the swing low here, or if you want to be it more conservatively, it would be below the support level, this red level here, perhaps around this price level. The idea is to book profits once we approach resistance on top. And in fact, in our Lunch and Learn session, if you have not watched it yet, we actually discussed how this would be best traded, or how this could be traded, in fact, either through an outright stock trade, through an options trade, and if it was an options trade, how would we set it up? So if you haven't watched it yet, take a look. So far, we're off to a good start. And if you look at the futures market, we can see that on Friday, if you go to at GC, the continuous contract for the gold futures, we can see that prices are slightly up as well on Friday. So I'm expecting that this trade will pan out just fine, but of course there are no guarantees, and that we're definitely off for a good start. What about oil? USO, the United States Oil Fund. Well, this was another trade of the week, I think 2 weeks ago, maybe 3 weeks ago, where we called out oil when it was exactly at this price level. Yeah, June 20th. We discussed this setup in our scanning session, 2 weeks ago, 3 weeks ago, when prices were exactly at this level. And what did we see? We saw the prices hit this huge resistance level at the 83 level. You can see it here. If you zoom back a little bit, this level has been contested and not broken for multiple times now in the last couple of years. Here, 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 and once again here. And every time price went to this level, we saw a sharp bounce off this level. So our trade idea was, all right, let's do it again. Let's hope that history will repeat itself and we're going to bounce off this level. This is exactly what happened. Then we went down, consolidation ever since and now, and then we had an attempt to fill this gap here to the upside. I believe, that's my feeling, we're going to see a gap fill in the next week or so to fill this gap. And then afterwards, I guess it's everybody's guess where prices will go. But I think this gap fill is very much in order. We're very near now. So I would not be surprised if prices came up all the way to at least fill this gap here to this bar. All right. So this is for oil. What about Bitcoin? Well, Bitcoin is pretty much business as usual, in a sense that we are still fighting to break this key resistance level. Check it out here. This very strong key resistance level at around 108,000. It has been contested here. We failed. Then this huge correction here with the decline in the stock markets. Bitcoin came back up. We contested it again. We even temporarily broke over it, and we failed again. One more time into it, failed again, and now one more attempt to get into this level. It seems like we may be failing once again to break this level. It's really, really contested. I think in my book, it is just a matter of time when we will break it. It's not a question of if, but a question of when. And if we do, again, my interpretation, my opinion is then we'll see a sharp increase in Bitcoin, potentially even pushing towards 150,000. But this level needs to be broken firmly first. Let's have a quick look at what the live market is doing right now in Bitcoin. Of course, the market is open. You can see it here. So let's switch to the live market. And we can see, yeah, it's just hanging in there at 108,000 in Bitcoin. But I think it's coiling up. I think it's just a matter of time to finally get through this level. All right. So what else do we have? Let's have a look at some of these symbols that we found interesting last week before we focus or start with the symbols for this week. So last week, and you can always see it here in our watch list or on the watch list that I'm creating in every scanning session. We can see that, for example, we looked at a whole bunch of things. And I'm just going to pick some highlights. See, we had the GLD trade, which is just, working out nicely right now. It's definitely off to a good start. We had a similar trade in the SGLN symbol, iShares Physical Gold, a symbol that is being traded on the London Stock Exchange, and actually a correction at this point. I'm not sure who pointed this out. If you are in the room, please put a little note into the chat box. The prices that you see here are actually not quoted in pounds, which would make this contract or this ETF really expensive. In fact, these are quoted in pennies and pence, so which makes it much more affordable. That's something I learned today, and actually what we're going to be doing very soon for the dashboard as an improvement is we will be listing on which exchange a symbol is being traded and what is the currency of trade. Okay, so it's going to be pounds, pence, pennies for this one, US dollars for the most other ones, maybe euros for some other ones as well. So this will be listed in our scanner very soon. We're currently working on this improvement. So thank you very much for that suggestion, whoever brought it in. Okay, so these were the two gold symbols. And we also had Palantir. So Palantir was, of course, a stock that everybody knows. And we said, okay, this retracement in Palantir could be a great opportunity to enter along, and this is exactly what seems to be panning out right now. We hit our little entry zone here. You can see price wicked into this entry zone, which we drew last Saturday, and the idea was that this is a zone break retrace setup, and we're going to see some follow through into the long direction after this correction to the downside. And this is also a theme that we typically follow in these scanning sessions. We like stocks which are long-term bullish or strongly bullish and which currently experience some sort of correction. Why is this interesting? Because prices will be much cheaper, and this is when we want to enter into a long trade because we want to buy low and sell high. So for this, prices need to come down a little bit, which allow us to buy this symbol at a discount. So Palantir looks good. Also eBay, a stock that we discussed last week, looks really good. Off to a great start. Also a zone break retrace setup. We didn't really hit exactly our entry zone, but perhaps some of you took advantage of this trade and you're off to a good start here as well. Also Darden Restaurants, looking nicely, same thing. Long break retrace setup. We hit our entry here, and now we're also off to a nice start into the bullish direction. We need a couple of other stocks here as well, which are more or less unchanged ever since. Arthur J. Gallagher, one of our good old stocks here, is just chilling out the similar price area. Not much action here, similar to our waste management stocks, Republic Services, just chilling out in this entry area here, which we discussed last week. All right. So with this, Nicholas, are there any questions so far before we can start with a review of the most interesting setups moving forward for the next week?
Yeah, we have a couple questions. Can you hear me all right?
Yeah.
Okay, can you please go back to the USO chart?
Okay.
And these are some questions from Lenny.
All right. Lenny from New York City. Okay. There we go.
And the first question is, on the USO chart, there's a green line and green box just above price. Is that resistance? There's no label on it.
It is resistance, yes. And the fact that there's no label on it is because I have disabled labels. But once I go my settings here and I enable show resistance / support labels, you can see it will be labeled right here. So yes, that's intermediate resistance. Why intermediate? Well, because there is another green line above there and another green line above there. But for the interim, because price has been ranging after this drop down in this area, we found these two intermediate resistance levels. But for oil, or for USO, I should say, the key levels which I want to see in this symbol here is around 83, this upper extreme to the high side, and 63 to the downside. Whenever price goes to one of these levels, that could be an interesting opportunity to enter in the opposite price direction. So as price comes up to this upper extreme, the true idea is to go short, and vice versa. If price comes down to the lower extreme here at 63 around, the idea is to go long.
Thanks, Daniel. And just two more questions. The next one is on the gold symbol you were on. Was that GLD?
Yeah.
The question was, an MA rush line seemed to be acting like support. Is that line a moving average, or is it something more complicated?
It's some sort of moving average. Yeah, it's something that's calculated based on our quote secret sauce. And it's different from the typical MA that you will see because it's a multi-time frame moving average. So we basically are using data from multiple higher time frames to come up with this moving average. And this is also the reason why it's a little bit edgy. It's not a very smooth line because it comes from higher time frames. But yes, but in its essence, it's a moving average. And we use it often as dynamic support for some of our trades, just like this gold symbol here. And why dynamic support? Because it changes. As the MA changes price, as always does, it always changes price, this support level will change as well.
Thanks, Daniel. And the last question goes back to the S&P. And
SPY, I guess?
I guess so, yeah. And the SPY question was the channel you drew, or did you draw a channel?
I did, yeah, back in the day. Oh. I haven't updated in a long time, but yeah.
Okay, and his question was, is it technically incorrect now to extend that channel so that you treat that recent V in April as just a correction, or is the correction the beginning probably of a whole new pattern?
I would think it's the beginning of a whole new pattern because this channel was clearly broken. I really like this channel when prices were really rangy within that channel, and every time we neared the lower end of this channel, this was a great buying opportunity. Now, of course, that's no longer the case. So I would need to, I guess, redraw this channel somehow. It's not as nice anymore because now, I'm not sure if I can change it. Yeah, here. It's, I guess it's much wider now because of this correction. Sometimes, trend channels are a great tool when things are really clearly defined. Of course, this big outlier correction here kind of messed things up a little bit. And right now, I think I would not trust this trend channel so much anymore. I'd rather go to our support and resistance levels that we have in here in our dynamic support level. So this is, I think, more what I would be trusting right now to find interesting ideas for the SPY.
Thanks, Daniel.
Perfect. All right. So let me quickly go back to my slides. And now let's start looking for setups that are of interest for the week ahead. And what we're going to do is we're going to focus on one setup at a time. We're going to create a hot list based on what we see, and then we're going to start our detailed analysis. All right. Now, a couple of setups that we typically go through And let's start with the easiest one first. A classic healthy pullback setup. What is that? Well, a healthy pullback setup is a setup where we have been trending up for a long time and we have been pulling back lately, making price a bit cheaper. You can see it here, long-term uptrend, but as of late, a bit of a pullback within that longer-term uptrend. And Niklas, let me just ask you a quick question. Do you hear the music on the microphone? If yes, I will close the window.
I don't hear any music.
Oh, perfect. Okay, that's good. There's like a parade coming by near my office window here, and my window is open because our air conditioning is not working today, and it's quite warm in the office. But if you guys can't hear it, that's perfect. Okay, so this is exactly what we're looking for. Long-term trending stocks, but currently experiencing some sort of pullback. So how can we find these? In fact, it's very easy with our dashboard, and we only need 2 indicators for this. And this is for now going to be independent of our liquidity IQ indicators. I'm going to hide it for now. And what we're going to do now is, let me just quickly adjust this column here just for a second. There we go. Perfect. So what we're going to be looking for are stocks which are on a long-term uptrend and which are currently pulling back. And in order to find these symbols, we will be using these 2 columns here. The first one is called the MA Rush column, and the second one here is the pullback column. So we're going to start with MA Rush first. MA Rush is our trend indicator. It will show us, you can see it here, whether we are on a bullish trend or on a bearish trend. And for today, let's focus on a bullish trend. So I'm going to go here to MA Rush and select bullish. And once done, we're filtering down our stocks from 5,078. And the keen observer may have seen we've added a few more stocks to our list here, and more. There are more to come. So you filtered down our 5,078 stocks down to only 2,258. All right. So that's done. They're all bullish stocks here. Secondly, we are now going to apply our pullback filter here as well. So we're going to go to pullback here and select a degree of pullback that we are interested in. So for example, level 4 pullback. All right. And now we're down to only 96 stocks. And every single stock in here now experiencing a rather sizable pullback. For example, Arthur J. Gallagher. You may remember it. Now, a stock which is in a long-term uptrend since 1,269 trading days, but currently pulling back. If you look at the history here, we can see that, yeah, Arthur J. Gallagher, long-term uptrend, but currently a level 4 pullback. All right. So this could be an interesting one. In fact, I'm going to add this stock onto our potential watch list for the next week. It was on our watch list for last week, but we're going to add it one more time to the watch list today. So I'm going to create a new watch list. Create with today's date, 2025, July 5th, and create. Perfect. I'm going to add this stock to our watch list. Oops, did I misspell it again? Hang on 1 second. Let's do it proper. I didn't put the setups in front of it. So setups, colon, 2025-07-05. I'm going to add this one now to our watch list. Done. Next one, Republic Services. This was one of our trade of the weeks a little while back. It has dropped a bit further than I expected, but nonetheless still within a nice level for a pullback, within a very steady uptrend. So also here I'm thinking this can definitely be an interesting long entry opportunity to go long into this symbol. So also as this, we're going to add to our watch list. And we have one more. It's waste management, WM. You can see it here. Also here, a level 4 pullback within a very steady stock. Of course, both stocks here, RSG and WM, these two are both in the same industry group and also the same sector. So just keep this with a grain of salt, but also this one, I think, is definitely an interesting one for next week. Just make sure you to only trade one or the other. And one more, perhaps, RRC, Range Resources Corporation, a company in energy in the oil and gas industry. Here, the uptrend is not so well defined. But nonetheless, it's a level 4 pullback. But perhaps this one is a little bit more wild. So definitely for this one, you would use a deeper stop loss, a more loose stop loss if you want to trade this one. So the upwards trend here is not so well defined. But nonetheless, we're going to add it also to our list. Perfect. All right. So moving on, the next one is just a second. The next thing we want to discuss, if I go back to our slides here, is another setup called the bounce setup. A bounce setup happens also when we are on a bullish trend, ideally a long-term bullish trend, and we have experienced a pullback, not as shown by Trend Radar, but a pullback down to a technical level as per our liquidity IQ indicator, a pullback back to a support level. How can we find these? Well, pretty much the same approach. In this case, we're going to use our MA rush indicator scanner once again here to filter for bullish stocks. Done. And then we're going to use our liquidity IQ setup column here to filter for stocks which are currently trading near a support level. Long bounce. You can see here, we now filter down to 68 stocks of our 5,078 stocks. That's a really big filtering. And the first one that comes up is Marsh and McLennan. MMC, a very interesting stock in the insurance brokerage business. We can see here, if we zoom out a little bit, also this stock is indeed in a long-term uptrend. A couple of corrections along the way, but nonetheless, overall, a very strong uptrend. And currently we are trading, if I enable our liquidity IQ indicator here, near a key support level. Now, let's analyze this a little bit further. What exactly are we seeing here? Well, yes, prices are near the support level, but we are also seeing another support level. You see this little red line here, just below prices. Okay, so this typically means, and I explained this last week already, when two support levels are so nearby, it's typically the second support level, the lower one, which is the most important one. So you can see it here, prices came down to this first support level, but I would not bet my house on the fact that we're going to stop here. I think that prices can as well come down to this support level here if we come down. So if you want to trade the stock, make sure to put your stop loss below the second level here and not below the first level, because I think the second one will be the decision maker here. And will be the stronger support level. But nonetheless, we're going to add this one to our symbols to watch. And just to show you a little bit of how this can work, let me jump forward a little bit to Pilgrim's Pride Corporation. I skipped a whole bunch of stocks. We're going to go up again. But Pilgrim's Pride Corporation, PPC, just so you can see it, had a very similar situation where, once this loads, we can see that also here, we do have two key support levels right next to each other. The first one here at 45.40, and the second one here at 43.94. And once again here, the same logic applies, and this is based on my own observation. It's typically the second one which will prove to be the strongest and the decisive one. So here prices came down to the second level and bounced off clearly from this level. So also here, if you want to enter in this corrective move to the upside, put your stop loss below this level, because the intermediate support level may not be the decisive one. All right, but let me go up here again. What else do we have? Post Holdings Inc. Bullish for 1,122 trading days. All right. And also this one here came down to this intermediate support level. But also here, it's not the same kind of closeness, but also here at 103 and around 103, we do have a second support level right below price. And if you were to trade this stock, I would put my stop loss a bit wider below the second line of defense here. Actually, we have three support levels here. This third line of defense at around 102.40 perhaps for your stop loss if you were to trade this setup. All right, so I'm going to add this one as well to our watch list. And you can see how easy it is to, go through this, these candidates to find the ones which are interesting right now. Next one is LQDA, bullish for 915 trading days. Big gap here, down gap, which screams to get filled. And if we zoom out a little bit, this is a bit wild for me, and we've been a bit too sideways as of late here. We can see, however, that we did come down also to a key support level here. And also here, you may want to play the bounce towards higher levels. But in this case, I think I'm going to skip because it looks a bit too wild for my taste. All right, Nicholas, any questions so far?
Yeah, we have one from Stephanie who wants to know, why do you sometimes show the targets and stops from Liquidity IQ and sometimes not?
Oh, that's just to keep my chart clean. So I've trained my eye over the I guess years I've been doing this to see where my stop should be and where my targets should be. So I don't really need to have these on the chart anymore. But of course, if you're starting off and if you would like to have this guidance, you can enable the targets via this option here, show target long and show target stop right here. And that's the only reason. There's no other reason for this.
Thanks, Daniel. And one from Lenny talking about waste management stocks. What happened to N, which is one you picked out last week?
Yeah, let's have a look. So we did have Republic Services last week. That's the one which is also my depot right in my portfolio right now. So this one is correcting a bit deeper than I thought. So let me just quickly see what we saw last week here.
Just to mention, Lenny mentioned WCN. He says that was the favorite last week. I don't know if maybe you mentioned WCN last week.
We probably did. I'm going to have a quick look. So, okay. So WCN. Okay. Do I have a filter on this? Oh, this is today's list. That's fine. WC. Oh, this one. Waste Connections. Yes. Let's have a look. Bullish for 1,257 trading days. Yeah, this one went further down and kind of confirms to some degree of what I mentioned before. If we have two support levels nearby, typically it's the second one, which proves to be the strongest. Of course, here we even went further down. Not sure what happened on this big down day here. Things are recovering, but nonetheless, even at these price levels here, this is still an interesting long trading idea, despite the fact that Trend Radar went to level 5 down, as you can see it here, which is not uncommon for this particular waste management stock because it's more volatile than the other ones that we saw. So we had this level 5 pullbacks in the past before. If you contrast this with Republic Services, you can see it here. It's a much more steady stock where the pullbacks are not as deep. They only last to level 4, but nonetheless, it's kind of the same idea of entering on a pullback when these happens, even if they're a bit bigger, because the stock may be more volatile.
Thanks, Daniel. We're good to continue.
Perfect. All right. And I asked one more time, Nicholas, is the music not too loud?
I honestly have not heard any music at all.
Really?
Yeah,
okay, it's
not
really
at all.
blasting. That must be a sign of the quality of my microphone, I believe. Okay, well, moving on. So these were our pullback stocks. Now, let's do one more search here. Let's look for our zone break retrace setup. So zone break retrace setup, oops, where are my slides? There we go. A zone break retrace setup can happen when we actually break a level. When we break a support level to the downside or we break a resistance level to the upside. Because what can happen then is we're going to see an initial move in the direction of the break. You can see it here. Support is broken, an initial move in the direction of the break, and prices pull back towards the broken level. We call it a zone break retracement back to the broken level, which at this point will act as resistance. It switch roles. So this can happen to the downside where support is broken, but it can also happen to the upside when resistance is broken. We see an initial move to the upside, and then we pull back down to the broken level. You can see it here, up and then down. And here, resistance also switch roles, and we, and at this point will act as support, and prices will at that point move higher. So how can we find these kind of setups? Well, it's quite easy. Back to our scanner, and let's go here. And we now will simply search for zone or long break retrace. This criteria here. We click on it, and wow, that's a lot. So you can see it here. Of our 5,078 stocks, only 5 stocks have survived this really stringent scan criteria. That's quite impressive. So let's see which stocks are these. New Skill Power Corporation. Yeah, you can see it here. If you don't know what they do, they offer small scale nuclear reactors, I believe, of some sort. It's definitely in the reactor business. And we can see here, wow, these really, really took off. Of course, of them a couple of bigger retracements here, but they really took off down from low price levels around 1, now down to up to 38 something. We broke above resistance here, all the way up, and now prices came down back to this broken resistance level. I like this setup. Why? Well, first off, we have a level 3 pullback on trend radar. We are definitely bullish. You can see it here. And prices are now coming down to the broken resistance level, which may act as support at this point. And if you look closely, what also do we see here? We see the MA rush line here coming into play, which can act as additional dynamic support. So to me, definitely an interesting stock to potentially entering long after this pullback all the way up down here from the all-time highs at 45 down to the 30. Now for 35 area, maybe it comes down even a bit further. If it comes down to potentially to this level here, we may see how this could be a great entry point to enter long into this particular stock. So I'm going to add this one to our list as well. There we go. And 51 Talk Online Education Group is the next one here. Bullish for 433 trading days. All right. I can see it here. It's been grinding upwards step by step. And what's really interesting here, the higher prices get, the higher the correction get as well. Look at this one here. Up, modest correction. Up a bit more, a deeper correction. Up a bit more, a really deep correction. Now we are once again quite a bit. And here I actually would not hold my breath that this level is going to be holding. If history is any indication, we may see a deeper correction, maybe even down to this level here, and then take off. So I think I'm going to skip this one just because of the extent the correction have been in the past for this particular symbol. All right. So this is exactly how you can find these setups. I want to discuss one more setup with you before we can look at individual symbol requests. And this setup is based on what we call a magnet zone. So what's a magnet zone? Let me show you. So a magnet zone, I'm just enabled here right now, is what happens when prices are somewhat in the middle, in between support and resistance. Let me just find a couple of ones here. Let's say this stock here, ABM Industries Incorporated. We can see it here. Price is somewhat in the middle, in between support and resistance. Here's another example. ABAS. Prices will be somewhat in the middle, in between support and resistance. Also, these magnet zones are tradable, but we need to add some additional criteria to it because we want prices to have enough room towards either end, either the short side or the long side. So, and we also want to make a directional decision of whether we should be positioning ourselves to the long side or the short side. So how can we do this? Well, first off, we're going to add a trend filter to the whole mix. So we're going to say, okay, I'm only interested in bullish stocks. Bullish has been my direction of choice for stocks because stocks do have this upside bias in their price action. So bullish stocks, which are currently in the magnet zone. We have 402 stocks right now, but this is not enough. Let me give you an example. Let me just pick this one here, AFL Incorporated. Let's see if this is a promising candidate. Actually, this one would be a good one because what I want to see is if stocks have enough room to the upside where our profit target, which always will be placed right below our resistance level here, is far enough away. Certainly should be further away than our stop loss, which will always be placed below our support level. So how can we find these stocks? Well, basically what we want to find are stocks which are really good reward to risk ratio. So if you look here, for the upside for this one, our reward to risk ratio is 0.77, which actually is not the worst, because it could be much worse, but it's also not the best one. You see the RR there on the tooltip? That's the reward to risk ratio. Okay, so how can we find stocks with a really positive reward to risk ratio? Ideally one above 1. Well, we're going to enable one more column here called the long reward risk. You can see it here. Okay, and this one shows you what is my reward risk to risk ratio. And then we're going to sort or filter, I should say, filter by reward to risk ratios above, let's say 1.5. And look what comes up here. Only 4 stocks. In fact, the nicest one here with a reward to risk ratio of 1.61 is this one here, Coca-Cola Consolidated. And if you remember, this was a symbol that we have discussed quite a few times as a symbol that we may eventually want to get into it as it was approaching this support level down here. And this bounce would have worked out beautifully. But even right now, if you were to trade the symbol to the long side, it's still an interesting candidate because our profit target is at 90.29% of current price, and our stop loss only at minus 12.02%, giving us a reward to risk ratio of 1.61. And it's definitely an interesting candidate if you believe that this long-term uptrend is to continue, and the prices will go all the way back to this resistance level here at around 144. So your target could be perhaps at 140.42. All right. Nicholas, I think this sums up pretty much the symbols of the interesting symbols of the week. But let me quickly actually add this one to our list as well. Now I'm going to go through this watch list that we have created, and we'll discuss the ones which are most promising for the week ahead. So here we have, just take this up, we have 8 symbols to discuss. Let's check them out. All right. I'm going to filter them here by our, in fact, by Rush, by trend length. So the first one we had here is New Scale Power Corporation. I like it. I think if prices come down to this level here, then we have a nice coming together of Rush's first support line, the broken resistance line acting as support, and a longer term uptrend. So I do like it. I'm going to take a screenshot of this, keeping this on our radar for next week. Moving on, Arthur J. Gallagher, currently in a magnet zone for 1.10 reward to risk ratio. Very nice. And we can see it here. Also, this one, definitely an interesting long opportunity. Idea, I'd like to see prices come down a bit further. We saw it here on Wednesday. Prices wicked down into our entry area. This would have been the best entry condition, but nonetheless, I'm going to add this once again to our watch list for this week. It was on our list last week where we came down here to our entry level, would have been already in profit. But even for this week, I'm going to add this one once again to our watch list. It's still an interesting candidate for a long trade. MMC, Marsh and McLennan Companies. I like this one a lot. If we are willing to keep our stop loss below this level, this is very important because we had these 2 support levels very close to each other. So here we want to give this trade a bit more room. If you are comfortable with this, I think it could be a good idea to scale into a long position for this particular stock, Marsh and McLennan, betting on the fact that this long-term uptrend will continue. So I'm going to add this one here as well. Marsh and McLennan. Also here for a long entry. All right. RSG Republic Services Inc. I like it too. Level 4 pullback right at the support level. I think a great stock to potentially go along as well. I know we had it on our radar. It retraced a bit lower as I thought. I still think this is a great long, so I'm going to keep it on our radar. If you are not long this symbol yet, we are going to we're going to add it for next week as well onto our radar. Let's see where prices open on Monday. Very similar to Waste Management. Here, keep in mind that this stock is very much in the same space as RSG, Waste Management. And the only thing I don't really like about this one here is that this resistance level on top is very nearby. So this stock doesn't have that much room. So in fact, I'm going to skip this one for this week just because, resistance is right here and we may bounce off this level. Moving on, RC, Range Resources Corporation. All right, what do we see here? Similar thing. We are somewhat in the magnet zone. We do have a level 4 pullback, but we are also right next to resistance here. So for this one, I think I'm going to stay on the sidelines as well because we are right in resistance. We may see a bounce off this level. And Nicholas, give me just 1 second. I'm just going to close my window here. It's really noisy, at least for me. I'll be back in like 5 seconds. Oh boy. Okay, now it's much better. It was really noisy at my point. There's a big techno parade moving through our street here next to our office. So despite the heat in my office, I'm closing the window just to keep it a bit quiet, more quiet. So I'm going to skip on RSC because of this resistance level here. Coca-Cola consolidated. This would have been a really great buy down here. Now we're a bit higher. We still do have lots of room to the upside. I believe this move is bound to continue to the upside. So if you're not into this trade yet, this could still be an interesting one now that we see confirmation that we actually bounce off the support level. So I'm going to add this one to our watch list for next week as well. And one more, post consolidated. Just a second. There we go. Post holdings, or post holdings, I should say. Yeah, near this support level. I'm actually not sure what they're doing. Packaged foods. Okay. Have a quick look at our little description here. Headquartered in St. Louis, Missouri. All right. Operates as a consumer packaged goods holding company. All right. There we go. Okay, so let me just open this up a little bit and we can see, yes, we are in a long-term uptrend. And there's definitely periods of longer-term correction. I think this is exactly what we're experiencing right now. These periods, they can continue for quite some time. You can see it here. Now we're once again in this kind of prolonged period. If you were to trade this, just make sure that your stop loss would be all the way below this level here. There's a good chance that this correction will go a bit deeper. And if you want to scale in, just make sure your stop loss is a bit further away. I'm going to stay on the sideline for this one just because I think this correction is going to go a bit deeper. And then I think this could be an interesting candidate to go long here. All right. With this, I think we went through all these setups here. Let me quickly go back to my slides because we did have two symbols which Rolf from Winnipeg, if I remember correctly, has sent to me by email. The first one is CNNE and the other one is STIM. We're going to start with these two symbol requests. So CNNE first. So let me go back to my dashboard, go to our end of day scanner, CNNE, Canai Holdings Inc. All right, and consumer cyclical and restaurants. What we see here is actually quite interesting because this stock, you can see it here in the MA Rush column, just now has changed trend. All right, so how should we handle a stock like this? Let's check it out. And I mentioned this before. We do have a couple of customers who exclusively trend according our MA Rush signals, meaning once this loads, they would go long whenever MA Rush shows a long signal, and they would go short when MA Rush shows a short signal. Like bearish, go short here, would have worked out beautifully, and then go long here when MA Rush changes its mind and goes long. Well, would I go long right now for this particular symbol? Honestly, I would not. The main reason for this is not because MA Rush changed momentum here from bearish to bullish, which is definitely a good sign for going long. But the main reason why I personally would not go long here is because we have a resistance level right above price. The price is around 21.20 here. Resistance here at 21.24. That's not really a lot. We bounced off this level a few times before, here and here and here. So just the fact that we are bullish right now is not enough for me. If we clear this level and the level right above this here at 23, let's say, then I think we have much more reason to go long, because then also this long trend is much more established should we manage to break through these levels. But right now, that would be too risky for me, Ralph. So that was the first symbol. And the second one was STIM. All right. So STIM, Neuronetics Inc., a company in the healthcare industry and medical devices. We can see here, even before opening up the chart, this stock is in an uptrend for 104 trading days, currently at a level for a pullback, trading near a support level for the last 12 trading days, and has seen a liquidity capture 5 bars ago. All right, so let's check it out. All right, let's see if this matches up. Yes, we're trading near support level. We can see the liquidity capture coming in right there, which is 5 bars ago. You can see it here. 1, 2, 3, 4, 5 on this bar here. And we are bullish since February 3rd, 2025. Okay. So would I go long here? Well, potentially. I mean, it's not really a stock that I would personally trade. It's just a bit too much of a penny stock for this, with prices at around 337. But if you were to gamble and maybe speculating, I should say that, hey, we could break out of this consolidation level here. Prices just go down and down between this one here. It's very rangy. You can see it here. But if you think, hey, we can make a move higher up and potentially break out of this range here, yeah, this could be a really good reward to risk ratio, getting in really cheap right now, potentially seeing a price move to much higher price levels. So if you see where we are coming from almost about 22 now down at $3, yeah, the stock definitely has been much higher. And if you, and even probably higher than this, if I go further back here, let me quickly see. Come on, dashboard. Yeah, oh my goodness. Yeah. Well, you know what? Seeing that this stock has been actually going downwards in waves, maybe to me a little bit too risky. So it seems like a waving down, leafing down step by step to lower price levels. To me personally, perhaps a bit too risky. All right. So thanks, Ralph, for sending the symbol request. Now let's open up the room for symbol requests from the audience. Do we have any, Nicholas?
Let me check right down at the end. Yeah, we have one for Netflix. Or actually, sorry, let's start up a little higher from Lenny. He wants to see DAL, DAL. He says it's going into earnings. He's confused.
Oh, DAL. Okay. Oh,
DAL,
airlines. Delta. Yeah.
Yes, and he's confused what he should be thinking from the indicators right now. He's not sure what they're telling him.
They're going into earnings. Let's confirm this real quick. Let's put our earnings column here onto the scanner. Yeah, absolutely. Yeah. Actually, earnings in 5 days on July 10th. Nicely pointed out here by our scanner here. And by the way, guys, just real quick, we're going to come back to Delta Airlines in a second. You can actually filter by stocks which have earnings coming up. So if you want to see, hey, stocks which have earnings coming up in the next 2 weeks, just pick this filter here, for example, and then for sure you will see DAL in that list, at least in an ideal world. But there's so many 12 stocks of earnings coming up. And yeah, Delta Airlines is definitely one of those. So you can definitely filter by this criterion. In fact, for Delta, even if you had a filter on for stocks coming up the next week, you can see it here too. All right, would I trade the stock right now? Well, let's see where we are. So if I open up the chart here, we can see that we are certainly bullish, even though it's really wavy with big swings in there, but bullish since June 8, 2023. Up some bigger moves here. Now, right in this resistance level, and actually slightly above this level. I mean, going into earnings is always more of a speculative trade. I think even if you were to use options to minimize your risk, probably these options prices would be expensive now already because upcoming earnings are always priced in, and option prices follow demand and supply. So I guess that's already priced in. Not sure what I would do here. To me, it's a bit too wavy, and I don't like the fact that we have another resistance level up here. So if you were positioned to the long side, this may be the end of the gap up if we see one after earnings. But of course, it could also go to the downside if the earnings are not what people expect. And the fact that we have lower highs here, and here, may perhaps even suggest, because also kind of a flagging move as you look at this one here, that we may see another leg further down. So I'm not sure what to say about that airlines. Not my cup of tea. I would steer clear from it personally.
Perfect. Okay. And then the next symbol request will be post, P-O-S-T. And while that's happening, I'm just going to answer and bring up some questions coming in. So we had one question, same question from last week as well. Is there a way to enhance the visibility of the lines and boxes? Daniel said to set your chart to the black background. It'll help them stand out. But that's a feature suggestion we took into account. Maybe the opacity of the lines as a feature.
Yeah. And well, there's actually one more thing I forgot to mention last week. What you can do, it's also not my cup of tea, but what you can do is you can actually switch in the settings up here to what we call a light theme. So you click on it here, and this make the whole thing light. It looks a bit very, very bright on your eyes, but maybe that's something that for some of you is easier to reach. Personally, for me, it's a bit too bright, but you know, everybody has its own preferences. So I'm gonna keep this on for this chart. I'm gonna switch off to the dark mode. And we can see here for post, yeah, and Lenny was saying that this is actually one of the oldest companies in the US for cereals. That's cool. Yeah, I personally not a big cereal fan, even though I like actually all I remember is Kellogg's. Maybe Post is also in the cereal space. Yeah, but yeah, long-term uptrend holding in there very nicely. And if you were to go long here, I would just put my stop loss, unlike suggested by the indicator here. I wouldn't put it at 104.62. That's a bit too tight. I would put it below the second, or that's actually the third support line here, maybe at 102.68 or something. So a bit further away to give the stock a bit more room. All right.
Sorry, I was muted. And okay, great. The other question was, hey, I don't see your weekly watch lists on my end, and those are Daniel's watch lists, so those are not going to be visible to you.
Yeah, but that's actually a really good idea because what we're thinking, and don't hold me down to this, but at least we're thinking about this, is to introduce a new feature to this dashboard called a shared watch list, where, for example, I could share this watch list, the ones I just created here, as a watch list that you can see. You couldn't change it because it's still my watch list, but you can see the contents of this watch list in your account. So that's something I think we're going to introduce, and then we can simply share this watch list with all of you, and you have access to it. So thank you for that. That actually is a good reminder.
Perfect. Yeah. And Kevin has a nice comment here. So he says, or just an important thing, he says, on July 9th, this Wednesday, be aware we might have market volatility basically because it's the deadline for Trump's tariff announcement. So we know that the tariffs have made the markets move. So he says that's coming July 9th. It'll activate August 1st. Also, he says on Thursday, there's non-farm payroll numbers coming out, which might be bearish unless they put bullish numbers and then they have to readjust a month later. So that's something to be aware of. Probably going to be an interesting week. And
yes, for sure.
Netflix is the next symbol.
Yeah. Netflix. All right. Okay, so bullish for 597 trading days. Yeah, it's super, super extended. We broke above resistance here 51 trading days ago. Yeah, I personally would not go long right now. Too extended, too bullish. I want to see at least a level 2 pullback on trend radar. We had level 1 pullback a couple of days ago. Too expensive right now for my taste. So maybe if it comes down a bit further, this could be an interesting long. But right now, yeah, super bullish. Too extended for my taste. To enter right now. If you're already in it, congratulations. You did everything right.
Perfect. Okay, and the next one, Ralph says, thank you for checking out my symbols. Many thanks. And from Aubrey, Lattice Semiconductor, LSCC. He says it's a tier 2 plus support setup and positive momentum ahead of earnings could trigger a strong move toward the resistance at $57. And he says the industry, the sector tailwind remains strong, and so much for sell and may go away.
Let's have a look. Yeah, it's definitely bearish. If you look at despite what Amy Rush says here, we are making lower highs and lower lows along the way. That's to me more of a bearish sign. If I just bring this a little bit into focus here. There we go. So you could argue, well, I guess, we're making these lower highs. If I connect the high points here, and we're also to some degree making, maybe not, well, at least one lower low here. This low is higher. Yeah, would I go long here? Personally, I probably would not do it just because it's just not enough room here. So from 52 to 55, you would probably have to put your target here already. That's a bit too tight for me. And the fact that we are somewhat in a bearish channel and Amy Rush is bearish. Personally, I would not use this as a long trade, but maybe based on the fundamental reads that you have, Aubrey, that's a different thing. Here, just solely focusing on the technicals, that's not something I would do.
And and just to make sure I read his comment properly, he said that, right now as it came above that support. It's also crossing above a tier 2 from Volume IQ. And he says SMH, which is in the same sector, I'm guessing is at an all-time high. So expecting that maybe that's going to carry it up a bit.
Yeah, it is possible. I mean, this one definitely has a very different outlook here. Bullish for 559 trading days. The other one was more of a bearish stock. But yeah, it could get some tailwind from this ETF for sure, and just broke above the all-time highs just on Thursday, in fact.
And the
Thanks for
next
that topic.
symbol's from Frank. It's MU, Micron.
Yeah. Micron, there we go. I just switched bullish 8 trading days ago. All right, let's have a look. Also semiconductors. Yeah. Wow, lots of interest in semiconductors right now. Yeah, we see it here. It switched bullish 8 trading days ago. Lots of room to the upside left to the all-time highs here. So that's a good sign. Yeah, and the fact that we kind of broke above this, also this resistance level here, which we established a while back, it got out of scope a bit, but we still got above it. This to me would be a nice line in the sand to put my stop loss just below, maybe below this level here, and then expecting, hey, prices may come up higher from here on. So yeah, that's an interesting one. And it looks like to me, after this really big move up here, if I measured this real quick, bear with me for a second. Let's see how much of the retracement was that. If we use our fib tool here, from here to here, how much did we go down in the end? We went down to, well, quite a bit, to the more than 78.6% retracement level. Oh, nonetheless, yeah, potentially for a long. I mean, I prefer technical steps which are a bit more clean, but if you want to have exposure in the semiconductor space, maybe this one or perhaps the one that Aubrey mentioned. Which one was it again? Nicholas, do you remember what that was?
Lattice Semiconductor or SMH?
SMH, yeah, that one here. That one has a better technical outlook. It just, broke just above its all-time high. It really has clear skies ahead. So maybe this one would be more on my radar than the previous one.
Thanks, Daniel. And the next one's from Suzanne, SCI, Psi.
All right. SCI. Okay, let's just go. Oh, there we have. Yeah, I saw it there. Service Corporation International, bullish for 338 trading days. All right. Earnings coming up at the end of the month. All right. Let's have a look. Okay. Yeah, definitely bullish. And overall bullish too, even though we had some deeper correction where ME-RAS changed, but just by looking at this with your naked eye, without any indicators on it, that's a bullish stock. If I see one, also hear the phenomena that corrections get deeper as prices get higher. I guess that's just normal. Maybe percentage-wise, the correction is just as deep, but just look bigger. Yeah, and right now, where are we right now in this bullish trend? We are nearing resistance. Yeah. Would I enter now? Probably not. Too close to resistance. If we ever come down to one of these levels again, to the 71 level, that could be a different story to potentially enter long. But going long right here, where you're right below resistance, probably not.
Perfect. And the next one's from Gurno, PPC, hold or sell.
We just discussed Pilgrim's Pride Corporation. Yeah. It's a nice one. Near a support level, definitely a buy. Or if you already have it, keep it. Yeah, 100%. I like the stock. It's a good stock, a nice bullish uptrend, very clear defined support levels here. Maybe put your stop here at 42, but yeah, definitely hold.
Thank you. And then
Hold
the next
or add to your position. Yeah.
And the next symbol is from Suzanne again, Suzanne again, RMBS.
Yeah. RMBS, Rambus, bullish, also semiconductor. What's up with these semiconductors today? All right. We just switched to bullish here, facing key resistance. Yeah, same. Also here, I'll be careful. Too much of a resistance here. Even though we switched to bullish as per our ME-RAS indicator, I want to see a break above this level before I do anything of this one. Otherwise, there's too much resistance, or perhaps a retracement down to a level like this and then go long. But right here, I would not go long. Too risky.
Perfect. And quite a few people saying, oh, they'd like the idea of the shared watch list. The
Yeah.
next symbol is CNP. CNP from Ralph.
Uh,
Or 1 second, was this? The CNP, the
Sen
supports, the resistance and support zones are flipped. Can you explain that?
yeah, that's happened sometimes. Um, it's very easily explainable, and it's kind of an abnormally, but it happens. So as a rule of thumb, support zones like this one here, they are typically based on volume relevant swing lows. So here we had a series of swing lows. You can see it here and so forth. And if some volume criteria also come into it, the indicator will print a support level. Resistance levels are based on the opposite principle. We need to have swing highs to some degree, volume relevant swing highs. Sometimes this a series of swing lows happens on higher price levels than swing lows happening at higher levels than swing highs. I hope this was clear. Swing lows are happening at higher price levels than swing highs. Oh boy, that's a mouthful. But also what you see here is that we in fact do have a new resistance level up here. It's just not labeled. The indicator will label the nearest one. And if this level down here is nearer, maybe we can change this logic at some point, then this one up here, it will label the one down here instead of the one up here. So I hope this was clear. But in fact, we do have a higher price, a higher resistance level on top of price here.
Thank you. And the next symbol is from Stefan, HIMS. And
Yeah.
while we're going there, we just have a couple comments. So Lenny says, another thing that might help the visibility of the lines on the dashboard is to have, like on TradingView, the thickness of the lines is an option. That's probably one of the reasons it's not visible sometimes. And another comment from Lenny was he's surprised that you do not dismiss Fibonacci levels as voodoo because you're so
Yeah.
technical.
But these are technical factors too, where you measure the degree of a correction. I mean, based on swing highs and swing lows, that's a technical that's in every technical analysis textbook, I believe, at least to me. I mean, maybe some perfectionists put the Fibonacci's into some other categories, but to me, it's a technical analysis because you use historical price action to predict what may happen in the future. So anything that's based on this idea, to me, is it's about technical analysis. Fundamentals are more about like what are the numbers of the corporation, what kind of political news may be coming in, and trying to interpret how much is already priced in, how much was a surprise, or maybe a surprise when numbers have come out differently, and so forth. So that's more fundamental. But anything that's based on historical price action and how you use it to predict what may happen in the future, that to me is technical analysis. But I mean, once again, that's just my definition of it. Okay, so what do we see here for HIMS? Definitely in a magnet zone. We can see it here in between support and resistance. It's been bullish for quite some time. Let me see if you can see the bullish label here since January 2024. Yeah, a nice gap to be filled. Yeah, I really like this one. This gap screams to get filled. I like it. I like it for a long trade. Absolutely. So if you believe this correction here to the third MA rush line has finished, I think this could be an interesting opportunity to perhaps open up a small position in the anticipation that this gap, which is sizable, might be filled. And this also coincides exactly almost with our target level here, right below this resistance level. Good one.
Perfect. Okay. And then I'm trying to see if we have any comments we didn't get to. Kevin says, like earlier in 2025, the Mag 7 stocks are going to huge highs while RSP is lagging. The general market is weaker than these stocks, indicating maybe there might be a big drop coming up. And he said he noticed or read that there were a lot of big funds or institutions quietly selling some of their holdings, maybe anticipating a shift.
Okay.
And
Yeah, thanks for that.
checking, yes, also just checking to see if we didn't miss any symbols. No, we did not.
Perfect. All
So
right.
that's
So
it.
with okay, great. Then let me wrap up what we have seen today, and let me go back to my slides. And of course, if you have not downloaded our ebook yet, please consider downloading it. The link is in the chat. And of course, if you are interested in our great dashboard, which we use every day, I use every day to find my trade ideas. Most of my portfolio right now is filled with stocks based, which I found with this dashboard with very few exceptions. So I use it, we use it. It's a really cool tool to find interesting setups in just a couple of minutes. So try it out at tradingindicators.com/view. You'll get a full week of a free trial. And afterwards, we have interesting monthly and yearly options. Also, the bootcamp, of course, we mentioned it before, the Discord channel. These are all in the chat. But what I really wanted to say is that next week is going to be an interesting one. Why is that? Because we have a couple of cool events coming up. So first of our Lunch and Learn on Tuesday at 12 p.m. Eastern. You're going to get an invite for this. And then on Thursday at 9:30 a.m., we will have another live trading session. You will all get an invite. And this time we're changing it up a little bit. We're going to live trade to pass a prop trading challenge. So if you ever heard about prop trading, it's a big hype right now. This is exactly what we will be doing on Thursday in collaboration with the Trading Pit, which is an up-and-coming prop trading firm. They're quite popular in Europe, trying to get their foot into the US market, and we're going to help them a little bit with this. They have great concepts, such as an automated pass of your trading if you are nearing to breach your daily drawdown, which I think is unprecedented. And it's really user-friendly and trader-friendly as a criteria. So they're making it easy to prove yourself passing these challenges. And if you do, then of course they have good payout rates. And how this works and how we will fare with our indicators to attempt to pass these challenges, all we're going to find out, I guess, on Thursday at 9:30 a.m. Look out for the invite for that. With this, guys, I wish you all a great long weekend if you're in the US. Happy 4th of July once again. Enjoy your barbecues, enjoy your fireworks, and I'll see you all on Tuesday at our Lunch and Learn session. With this, guys, have a great day. Thanks, Niklas. Bye-bye.